Welcome back to the channel. If you're new here, my name is Robert with the Wealth Report, and on this channel we break down stocks, crypto, and smart investing strategies to help you build real wealth over time, without the hype. Today, we're diving into the best stocks to invest in for 2026, and more importantly, how to invest if you only have $200 to $500 per month. I'll show you exactly how to split your money, explain why these stocks matter, and help you build a simple, long-term portfolio. Let's get into it. Why these stocks for 2026? The stock market in 2026 is all about a few major themes: artificial intelligence, cloud computing, consumer brand dominance, and reliable dividend income. The stocks I'm sharing today are large, proven companies that analysts continue to favor for long-term growth and stability, perfect for monthly investing using dollar-cost averaging. Stock number 1, Microsoft, MSFT, Core Tech Stability. Microsoft is a cornerstone stock for 2026. Between Azure cloud services, enterprise software, and aggressive investment in AI, Microsoft continues to generate consistent revenue and strong profit margins. Why it works: dominant cloud platform, strong AI exposure, long history of steady growth, monthly allocation, $120 per month. This is a stock you hold for the long run, not flashy, but incredibly powerful. Stock number 2, Apple, AAPL, consumer and services giant. Apple isn't just an iPhone company anymore, it's services division. Things like Apple Pay, iCloud, and subscriptions now makes up a huge portion of revenue. Why it works? Massive brand loyalty, growing recurring revenue, strong balance sheet, monthly allocation, $100 per month. Apple adds stability and consistency to a monthly investment plan. Stock number 3, Nvidia, NVDA, AI growth engine. Nvidia is one of the biggest beneficiaries of the AI revolution. Its chips power data centers, AI models, and cloud infrastructure across the world. Why it works: leader in AI chips, strong earnings growth, high demand from big tech, monthly allocation, $150 per month. This is your higher growth stock, more volatility, but massive upside potential. Stock number 4, Target, TGT, dividend and defensive play. Target brings balance to this portfolio. It's a dividend-paying company with a long history of rewarding shareholders, especially during uncertain markets. Why it works: dividend growth, consumer staple exposure, lower volatility than tech monthly allocation, $80 per month. This stock helps smooth out the ups and downs of growth stocks. Stock number 5, Amazon, AMZN, e-commerce plus cloud power. Amazon is more than just online shopping. Amazon Web Services, or AWS, continues to drive profit growth through cloud computing and enterprise services. Why it works: cloud computing leader, global e-commerce dominance, multiple revenue streams, monthly allocation, $50, $100 per month. This stock gives you exposure to both consumer spending and cloud growth. Monthly investment breakdown: $500 month. Example: Microsoft, $120, Apple, $100, Nvidia, $150, Target, $80, Amazon, $50, $200 month. Example: Microsoft, $50, Apple, $40, Nvidia, $60, Target, $25, Amazon, $25. Scale this plan up or down. The strategy stays the same. Why monthly investing works: this strategy uses dollar-cost averaging, investing consistently regardless of market conditions. You buy more shares when prices are down and fewer when prices are up. Over time, this reduces risk and builds discipline. This content is for educational purposes only, not financial advice. Always do your own research or consult a licensed financial professional. If you found value in this video, make sure to like, subscribe, and turn on notifications so you don't miss future investing breakdowns. Comment below and tell me, Which stock are you most confident in for 2026? Thanks for watching, and I'll see you in the next one.